What happens when crypto whales start gorging themselves on a token while retail traders panic sell? Well, we're witnessing it right now with Kaspa. In the last 24 hours, whale wallet number 5 just added 65 million KAS tokens from Kraken, bringing their total holdings to a mind-blowing 447 million KAS. That's not a typo, folks. Nearly 500 million tokens in one wallet. But here's the kicker. While you've been watching Bitcoin's every move, Kaspa's top 100 wallets now control 37% of the entire supply. And they're not stopping. Today, I'm breaking down why this whale accumulation could signal the next explosive move for KS, and whether we're staring at a breakout to new highs or a devastating crash to lower support levels. By the end of this video, you'll know exactly what these whales see that retail doesn't, and why it could change everything. Alright, crypto family, let's dive into the chaos that is Kaspa right now. Because while everyone's been obsessing over Bitcoin ETF flows and Ethereum's latest upgrade drama, KAS has been quietly setting up what could be the most important technical formation we've seen in months. Here's where we stand today, August 7th. Kaspa is trading at $0.087, up 1.32% in the last 24 hours. Now that might not sound explosive, but trust me, what's happening beneath the surface is absolutely fascinating. First, let's talk about this whale accumulation because it's insane. Wallet number 8 just added another 2.9 million KAS, pulling funds directly from Kraken. And that massive whale I mentioned, wallet number 5, they've been on an absolute buying spree, accumulating 65 million tokens in recent moves. But here's what's really interesting. These whales aren't buying during pumps. They're accumulating during periods of uncertainty, during the volatility, during the exact moments when retail traders are hitting the panic sell button. Now, from a technical analysis perspective, Kaspa is sitting at one of the most critical junctions I've seen all year. We're trapped between a rising trend line that's been holding since mid-June and the 9-day moving average at $0.0884. Think of it like this. Kaspa just pulled back from a high of 12 cents in late July, crashed down to find support around 8 cents, and now it's coiled up like a spring. The question isn't if it's going to break out. It's which direction it's going to explode. And the liquidity situation, it's getting spicy. MEXC's order book is thinner than my patience during a bear market. It only takes $20,000 in market orders to move the price by 2%. Meanwhile, Gate.io has emerged as the volume leader, handling over 30% of Kaspa's daily trading volume. This liquidity shift isn't just technical noise, folks. It's a sign that smart money is repositioning, and when smart money moves, explosive price action usually follows. Now here's where things get really interesting and why I've been glued to my charts all morning. Kaspa is currently dancing on a razor's edge. We're sitting right at $0.08794, which puts us in no man's land between critical support at $0.082 and resistance around 9 cents. But it's not just about these levels, it's about what happens when we break them. Let me paint you the picture. Yesterday, I called out the $0.082 support level as make or break, and guess what? Buyers stepped in exactly where they needed to. The trend line held, the support held, but we're not out of the woods yet. The 9-day moving average at $0.0884 is acting like a ceiling right now. Every time KAS tries to push higher, it gets smacked back down. But here's the thing. MACD just flipped to a bullish crossover. That's the first sign of shifting momentum we've seen in weeks. Now, I know what you're thinking. But the other indicators are still bearish. And you're right. RSI is sitting at 47.33, neutral territory. ADX shows moderate trend strength but leaning bearish at 28.21. The CCI is at -79.70, suggesting bearish momentum is still hanging around like that friend who overstays their welcome. But here's what the indicators can't tell you. Smart money doesn't wait for indicators to turn bullish. They position before the obvious signals appear. Let's talk scenarios, because this is where it gets juicy. The bull case, if we break above 9 cents with volume, and I mean real volume, not this low-energy sideways movement we've been seeing, the next stops are $0.095, then potentially 10 cents to 11 cents. That would be a 25% gain from current levels. The neutral case, we continue this sideways grind between $0.082 and 9 cents, slowly bleeding out weak hands until smart money is done accumulating. The bear case, if that $0.082 support fails, we're looking at $0.077, then 7 cents, with a worst-case scenario of $0.065. That's a potential 26% drop from here. But here's what's keeping me up at night. The whale accumulation pattern suggests they're not expecting that bear case to play out. You don't accumulate 65 million tokens if you think the price is going to crater. Alright, let's connect the dots and reveal what these whales are really doing, because once you see it, you can't unsee it. The top 100 Kaspa wallets now control 37% of the total supply. That's not just accumulation, that's consolidation. They're literally reducing the circulating supply available to retail traders. Basic economics tells us what happens when supply gets restricted while demand remains constant or increases. And here's the brilliant part of their strategy. They're using exchange liquidity gaps to their advantage. With MEXC showing thin order books and volume migrating to Gate.io, these whales can accumulate large positions without causing massive price spikes that would alert retail traders. It's like they're buying a mansion through the back door while everyone else is fighting over scraps at the front entrance. Now, let's talk about what this means for price action in the coming days and weeks. Technical confluence. We have that rising trend line from mid-June acting as dynamic support. Every touch has resulted in a bounce. That's not coincidence. That's institutional buying at predetermined levels. Volume profile. Despite the recent volatility, volume hasn't spiked dramatically. This suggests we're in an accumulation phase, not distribution. When accumulation ends, explosive moves typically follow. Market structure. The fact that KAS held above $0.082 yesterday, exactly where I predicted support would come in, shows that this market is being managed by sophisticated players who understand technical analysis. Here's my take on what happens next. This coiling action between $0.082 is setting up for a significant breakout. The direction will likely depend on Bitcoin's next major move and overall crypto market sentiment, but, and this is crucial, the whale accumulation pattern suggests they're positioning for a move higher, not lower. You don't accumulate 447 million tokens in one wallet if you're expecting a crash. The catalyst: watch for a break above 9 cents with accompanying volume. If we see 2-3x normal volume on that breakout, we could be looking at a rapid move to 10 cents and beyond. If Bitcoin has another major dump and takes the entire crypto market with it, even whale accumulation won't save KAS from testing lower support levels. So what does this mean for your portfolio strategy? Let me break it down. For swing traders, this tight range between $0.082 and 9 cents is perfect for range trading. Buy the dips to trendline support, take profits at resistance, but be ready to hold if we get a volume breakout above 9 cents. For long-term holders, the whale accumulation pattern is your friend. If you believe in Kaspa's technology and long-term prospects, current prices represent a decent accumulation zone. Dollar cost average if you're building a position. For day traders, watch that 9 cents level like a hawk. A break above with volume could trigger algorithmic buying and short covering, leading to a quick spike toward $0.095. Always use stop losses. If you're long, consider a stop below 8 cents. If you're short, brave soul, watch for a stop above $0.092. The key thing to remember, this isn't just about Kaspa, it's about understanding how smart money operates in crypto markets. They accumulate when others are fearful, and they distribute when others are greedy. Right now, all signs point to accumulation. The question is, are you going to follow smart money, or are you going to wait for the obvious signals that everyone else is watching? Look, crypto markets are brutal, and Kaspa is no exception. But suppose you've been following my analysis. In that case, you know that the best opportunities often come when the market is uncertain, when retail is scared, and when whales are quietly building massive positions. The data is clear. Major wallets are accumulating. Technical levels are holding. And we're setting up for what could be a significant breakout in either direction. Whether Kaspa breaks to new highs or tests lower support levels, one thing is certain. This consolidation phase won't last forever. And when it ends, the move will likely be explosive. If this analysis helped you understand what's really happening with Kaspa, smash that like button and subscribe for more deep dive crypto analysis. Drop a comment below with your KS price prediction. I read every single one. And remember, in crypto, information is power. The whales know something. The question is, are you paying attention? I'll see you in the next one. Stay sharp, crypto family. This content is for educational and informational purposes only, and should not be considered financial advice. Cryptocurrency investments are highly volatile and risky. Always do your own research and consult with qualified financial advisors before making investment decisions. Past performance does not guarantee future results. Never invest more than you can afford to lose.